Hey guys, back with another video. Today I'm talking about 3 narratives that I think will be huge this bull market. So let's just get right into it. So the first one is already massive, is already taken off like crazy, and that is Ordinals and BRC20s. Now, I think there's many reasons why this is so huge, this bull market. Obviously, I think one of the biggest ones is the Bitcoin ETF, imminently coming. So Bitcoin is in the spotlight. And obviously, we're learning that we can do things on Bitcoin that we didn't know we could do, such as, have JPEGs on the blockchain, which is actually better than a traditional NFT because it's actually stored on the blockchain on, the database that's probably going to exist, forever, as long as humans exist, Bitcoin. And, so that's a big deal. And even though we've gone up a lot, I still think it's early. And I think it's just such a massive narrative. It's making fees, obviously, on the Bitcoin blockchain big, which, while I think that is kind of unpleasant for the user experience on Bitcoin, I think it actually gives them even more attention because people are like, well, why are my fees so high? And you don't have to do too much research to figure out that it's because of, Bitcoin Ordinals and BRC20s. And then, because of that, a lot of other blockchains are copying, coming out with their own, even proof of stake blockchains are coming out with their own, which doesn't make too much sense, because I think one of the good things about Ordinals and BRC20s is that they are actually contributing to the security of the blockchain, by paying miners. And, it's funny how, like a year ago, people were saying, they were concerned that, as the fees go down or as the emissions go down for Bitcoin, every halvening, that there wasn't going to be enough incentive for miners to mine Bitcoin. But this just increased the fees a lot. So, but now people are complaining about them. So, time will tell. And the market will decide. The free market. So that's BRC20s and Bitcoin Ordinals. Narrative number 2 is DePIN. So I haven't really talked about this on my channel, but DePIN stands for Decentralized Physical Infrastructure Networks. Now, I think the most popular, most famous example of this is Helium. I actually just literally yesterday signed up for a Helium Mobile, which is like, it basically gives you a digital, what do you call it? It basically gives you a phone number. I forget the word for it. It gives you a SIM card, but it's like over the internet, so you don't actually get a physical SIM card. So, and you can have your own a new phone number. So now I have 2 phone numbers. I didn't even know it was possible on one phone, and it's pretty cheap. In America, I think all over America, it's $20 a month, which, it's pretty cheap. But after having it for one day, at the current price for mobile, the token, I'm getting paid $10 a day. So obviously, in 2 days, it pays for itself, which is insane. It's definitely not sustainable, but I mean, it might sustain itself for who knows how long. So getting paid $10 a day to pay, and paying $20 a month, that's a pretty damn good deal. So I'll probably leave a link to that in the description for Helium Mobile. Also, what do you call it? Hive Mapper is another one where you get paid for driving because you basically get a dash cam. You buy a dash cam. I think it costs around $300, the cheap one. And, obviously you put it up in your car and you get paid for providing data for the map. You get paid in honey tokens. And right now that's extremely profitable as well, is what I've heard. I actually ordered one of those too, but they're on back order right now and it won't arrive until around March, I think. But, yeah, so those are my 2 favorite plays. But with DePIN, I think we're kind of in the early stages, similar to, last bull market with DeFi, where there was a lot of, super high yields for farming, and it was completely unsustainable. That's kind of how it is now, but I think, the unsustainability might last for longer than you might think because it's the new hot thing. it could last for a year or two. You could be getting paid, absurd amounts for doing nothing, basically, as I am with, Helium Mobile and hopefully with HiveMapper. But, yeah, so that's Deepin. Now, the third narrative is a little bit out of left field, and I think a lot of people might disagree with me. But I think, obviously Luna, which was a decentralized stablecoin, or was trying to be a decentralized stablecoin, it went up to, I think its peak for the Luna token was like $40 or $50 billion market cap. I think decentralized stablecoins are needed, and I get super excited when I hear about a project that has decentralized stablecoins. And I think it's going to come back. I think people are still a little hesitant to jump in, rightfully so, because of what happened with Luna, losing your money overnight, basically, going to zero. So, but I think it's needed, a decentralized stablecoin, because right now the two major stablecoins in our ecosystem is Tether and USDC, both of which are kind of on opposite sides of the spectrum. Tether obviously has been around for a long time, but there's not a lot of transparency in, who's running it. And, obviously they're not super compliant with the US government. So there's some compliance risk if the government or, different governments try to come after Tether. That's kind of a risk. And they can, since they are centralized, they have frozen people's funds in the past. So even though they're not compliant with the government, they still have frozen people's funds. And same thing with USDC. They have frozen people's funds, even more so, I think, than Tether. And they are compliant with the government, which in itself is a risk as well, because they could basically turn into a CBDC, a centralized, a government stablecoin, more or less. And, basically give everyone's data to the government. And, if the government doesn't like you, they could freeze your funds. So, these are the two biggest stablecoins in the crypto ecosystem, and they both have massive problems and massive risks. And they're centralized, which is, defeats the whole purpose of cryptocurrency. So we need a decentralized stablecoin, and the current options are not really great. I think the biggest one is DAI, which, most people would probably argue that it is centralized. To be honest, I haven't looked super deep into it, but my understanding is that it's more or less centralized, that it's backed mostly by USDC, which, as I just said, is extremely centralized. And yeah, so we need decentralized stablecoins. My two plays at the moment, which I actually, have a large amount in both, really, is Zephyr Protocol, which is a privacy stablecoin protocol. It's actually a fork of Monero, just with a privacy protocol built into it, a privacy stablecoin protocol built into it. It is over collateralized. It is not really algorithmic per se. I mean, it's a little bit of semantics to say whether it's algorithmic or not, but it's a completely different mechanism than Luna's. And, on my reading of the white paper, I haven't read over it multiple times or anything, but it appears more sustainable than Luna. Obviously anything could happen. It could have a death spiral, who knows? But I think a decentralized stablecoin protocol with privacy features, that is a fork of Monero, which is the most time-tested privacy crypto out there. And right now, I believe the current market cap is around $50 million. So I just think the upside is massive for this thing. I think it could pull up Caspa, and it's down a lot recently. So I think it's a good time to buy, not financial advice. But that's Zephyr Protocol. ZEPH is the ticker. And the other decentralized stablecoin protocol that I have is Hubble Protocol, which is built on Solana. And that one has a current market cap of only around $35 or $40 million. So both of these are just so cheap. And if I'm right, and there is another mania phase for decentralized stablecoins, I think these things are gonna, do really well. And Hubble, I recently came out with a video on that. I'll try to explain it real quick, but basically it's it's really a borrowing platform right now is the main function that it has. So you can even borrow against Bitcoin and Ethereum, but of course, the major thing that people are borrowing against is Solana, or even their liquid staked Solana, which is what I'm doing, is borrowing against my my MSOL, which is Marinade staked Sol. And you get their decentralized stablecoin, which is USDH, and is over collateralized. Now, there's a bunch of more details that go into it that, maintains the peg, but basically it's over collateralized. And, once your loan to value ratio goes above 80%, you get liquidated. So obviously you have to be careful. I'm keeping my loan to values below 20%, to be extra safe, have a huge buffer, because you never know. So Solana could dip by 50% or more pretty easily, even in a day. In the COVID crash, Bitcoin, I believe, did a 50% down move in one day. So if that were to happen, even at my below 20%, loan to value, there's a chance I could get liquidated in one day. So you have to be extremely careful with leverage. But anyways, so Hubble Protocol and Zephyr, those are my two decentralized stablecoin plays. Super bullish on them. Really low market caps for both of them. And yeah, I rambled a little bit in this video, but if you liked the video, leave a like, subscribe. I'll see you guys next video.